The broadcast is now starting. All attendees are in listen-only mode.
All right. Good morning, good afternoon, and good evening to all of you, and welcome back uh, to the live webinar series here. On behalf of FXTM, this is your host, Harsh, and I would be your facilitator for the next 60 minutes. I've used the word facilitator because I strongly believe that this presentation or webinar is absolutely for you, and it's because of you. All right, so once again, a very warm welcome to all of you. And if if you are celebrating the festivities of light, wish you all a very happy Deepavali in advance. For all my colleagues who are joining from India, someone from Pakistan, and European countries as well as South Africa. So once again, morning, afternoon, and good evening, all of you. This is the first time that we are going with such a topic, live market trading strategies. Uh, so it is it is very simple to understand. We are not doing any slides or presentations in this series, and we have straight away gotten the Joel. I think there is some problem in your device. Uh, I presume that the audio is okay with all the others because I haven't heard any noise from others. So kindly check your audio, Joel, and I believe things should be fine. Yeah, thank you, Prashant, for confirming. So let's get started. So precisely what we are going to do in this webinar is nothing predominantly set. Okay, we are going to do some analysis uh, on a live chart. I mean, a live market environment. So it is something that I have not prepared, or I don't even have the habit of preparing when we do live. So it's going to be like we are doing live analysis together, and by the end of uh, the analysis, let's say we start with Euro USD, then we jump onto the dollar index, and then we might look into an index, Dow Jones, and gold. These are the four instruments, and sometimes Aussie dollar as well, where I meticulously follow every day and publish articles on that as well. So we will be beginning with these four analysis today, and do feel free to write to me for all your comments or queries or questions to my email address, which I will be presenting or typing it out here at the end of this webinar. All right. So that's what precisely we are going to do for the next 60 minutes, and I hope that uh, you will enjoy this session. All right. Before we begin, as a thumb rule, I have to read out disclaimer. So this is what is the presentation for live market trading strategies. And this is a disclaimer. Please give me a minute to read it out. It says that this written visual material is comprised of personal opinions and ideas. The content should not be constructed as containing any type of investment advice and or solicitation for any transactions. It does not imply an obligation to purchase investment services, nor does it guarantee or predict future performance. FXTM, its affiliates, agents, directors, officers, or employees do not guarantee the accuracy, validity, timeliness, or completeness of any information or data made available and assume no liability for any loss arising from any investment based on the same. Thank you very much. These are the rules and norms uh, every presenter has to follow, uh, and that is what we are doing here. All right, so let's get started off with the first instrument for the day, and that is Euro USD. So I presume that we are doing it for the first time together. So a normal way to begin, as per the rule of thumb, is to have a bigger picture in your mind always. Whether you are an intraday kind of a trader or an intraday trader or slightly long-term trader, all right? The thumb rule says when you begin to analyze your chart, have the bigger picture in your mind. Now, this is absolutely a perspective view, all right? So it may differ from two friends who are analyzing the same chart. You're not going to necessarily come out with the same output because one is an intraday trader, the other might be a slightly medium term to short term to long term trader. So the time frames will differ, okay? And with the difference in the time frame, with the difference of the view that you have in the time frames, your analysis for that particular period may not be the same. All right. So always remember, trading is a perspective view. It is not a thumb rule that it has to be done this way. All right. I'm going to generalize the way ideally your analysis should go, and that's how we follow. And so let's get started off with the first chart here. All right. As a standard, you might want to have a look on the daily chart. I'm not saying that you should go for a 5 years way or a 10 years way. There is no thumb rule for that, but it depends upon what time frame you want to analyze. Okay, so I'm going to spend a lot of time. All right, we are going to spend a lot of time together on this chart, and we are going to go step by step. All right, we will change views so that the perception might change, and you understand the bigger picture perfectly, and then we bring it down to the smaller picture, all right, the smaller time frame, as low as possible, and finally we would find out a potential trade setup to go ahead with. All right, this is our goal. So let us begin. Ideally, I would like to begin from the start of 2018 to have a slightly reasonable time frame, all right, because many of them are just starting off. I don't want to bring up the bigger picture suddenly as the first shot. All right, so I'm going to zoom out a bit and let us try and do some wave counting, trend lines, plotting of Fibonacci ratios, uh, and of course support and resistances. All right, so ideally, when you look at this chart, you should be able to scan the chart this way. Point number one: try to find out potential support and resistance as the first shot. All right, so I'm doing it for you. I'm writing R for resistances and S for support. So that would be my first resistance, followed by there's an interim resistance here. Then we go for the wave counts. Once we are done with the supports and resistance, in this chart, we are more interested in finding out resistances. Why? Simply because it's a falling market. I already have a question. Are you all able to see the charts, please? Oh. Okay. Just hang in, just hang in. Just hang in, just hang in. Let me see if something is wrong. Please let me know when if you are able to see the chart now. Please type in here when you are able to see the chart. I am waiting for your response. Kindly type in here. All right, so I believe that we are all on to the same chart view now. And sorry for the technical glitch in between. And thank you for reminding me because I would have gone. Obviously, you would have reminded me and stopped me. So we are all together now. We are starting on a reasonable daily chart view for the Euro USD currency pair, and we are starting to analyze from February or January 2018. This is not a thumb rule. I again repeat, this is not a thumb rule, but this is the first step. I would like to start off with you, and then I will also change the view, come into a more bigger perspective. But since we are all starting, I presume that many of them are all starting. We start with a reasonable time frame, and that is almost 12 months or 11 months. All right, so first thing we have identified on this chart is four major resistance zone or resistance price resistance. All right, 1, 2, 3, and 4, and we are focusing on resistance on this chart simply because the price is a falling one. You see the price chart, you see it's a downtrend. All right, okay. Now, one of the best part is to be with your waves. Believe it or not, if you are with your waves, you are almost 80% probably there with your trade. All right. So let's start our wave counts. We begin with the first wave down. If you were there with me in the last session, I told you that we would spend detailed time on wave analysis, and that's what we are doing now. So that's wave 1, followed by a corrective wave, which should be labeled by. Now, if you were there with me in the last session, you would understand the story why I'm labeling 1 here and then why corrective rally ABC into wave 2. Quickly, that first wave was a shorter term degree impulse wave, which is being followed by a corrective wave ABC, which is labeled ultimately as wave 2. Then wave 3 is again an impulse wave. It unfolds into 5 waves, and it's ideally the largest and the most powerful wave. So we are plotting wave 3 down here. Wave 3 unfolds into 5 waves, remember. So start counting your 5 when you are counting your third wave. 1, 2, 3. wave 4. This is the first time that we are beginning live series here, and believe it or not, I'm going to be with you every week, ideally on a Monday, where we will do analysis of major instruments, keeping the weekly and bi-weekly or quarterly perspective view. All right, and we shall find out potential trade setups there. So this is just a first of them. The second is being followed by 20 on the 20th of November. Unless I'm traveling, I'll see you guys every Monday starting end of December or January 2019. All right, so stay tuned with the live series webinars. So we've done wave 1, wave 2, and then 1, 2, 3, 4, 5, wave 3. Wave 4 unfolded slowly, steadily, taking a lot of time. For several weeks, it unfolded into a triangle. A triangle is a corrective wave, a type of corrective wave which unfolds into 5 waves, and each wave is subdivided into 3 waves. So, and all the waves are labeled as A, B, C, D, E. Don't forget, there are going to be quite a lot of theory sessions for Elliott wave coming up in December. So that is wave 4. We've got wave 1, wave 2, wave 3, A, B, C, D, E, triangle, wave 4, and there is a lower degree wave. There are lower degrees here. I'm not going to plot just to avoid congestion, but I can count 1, 2, 3, 4, and 5, which ultimately gives us uh, the fifth wave of the projected impulsive drop, which began all the way from 1.2550. So that is the first impulse wave, which began all the way from the beginning of 2018, January, February 2018, until the mid of 2018, that is somewhere in the month of July. Right, so this is how you label your impulse wave. In this case, the impulse wave was on the downside, uh, giving us almost 2000 points. All right. If you would want to use the Fibonacci ratio on this impulse wave, all right, this is the way you do that. Once you have your first wave and probably the second wave as well, you can project your third wave, which is the 161% extension of the first wave. So that this is the way you plot. In this chart software, you give 3 inputs. There are many others where you have to give only 2 inputs, which will work out like this, right? In this case, you've got 3 inputs. So you see that 161.8% extension was coming at 1.1842, which was already met. Prices went all the way towards 1.15. I'm showing you the historic charts with the correlation of Fibonacci ratios, and then we'll move ahead, okay? But remember, our goal by the end of this session, it is not a problem if we do Euro USD or another instrument in this webinar, but our goal will always remain to find out a potential trade setup at the end of the analysis. All right. The projection of the fifth wave, normally you take an extension of waves 1 to 3. Okay, and the third one will be the end of wave 4 in this case. That normally the extension, the fifth wave extension, normally is the 38.2% of the distance traveled by waves 1, 2, and 3. So that is the distance traveled by wave 1, 2, and 3. Uh, Wave 4 terminates over here. So that's the third point. And you can see that 38.2% was met at 1.13565, just a few pips lower, just about 50 points. So I had a question last time from Mr. Rajendra. I don't know if he's here or not, but how to find out the termination point of waves, and this is the way you do that, all right? Okay, so let's move on to the next part now. Ideally, when you have an impulse wave complete, it is followed by a corrective wave on the opposite side. So, in this case, we have an impulse wave drop. I think we have a question. Mr. Joseph, we are trying to analyze Euro USD chart using Elliott wave principle, that is an impulse wave, and corrective wave with the Fibonacci support and resistance, etc. Are you joining us for the first time, or are you doing technical analysis for the first time, please? If you are just beginning, please do not forget to enroll in the theory sessions or go back on the recordings of the Elliott wave principle webinar, which was delivered on the 2nd of November. It is going to be soon on the website, and have a view there. All right, I will be doing a theory followed by a live, a theory followed by a live. So if it is your first time, as you are saying, uh, please go on the theory. Let me see if I can give you a theory here. Uh, Quickly, I don't have much time to spend, but quickly, if I can give you a theory, this is what it is. So this is the basic pattern of the wave principle. Just give me two minutes, 2 minutes for Joseph. Please give me 2 minutes so that we don't want things to go absolutely blind. All right, Joseph, if you are here, this is the basic pattern of the wave principle. 5 down, 1, 2, 3, 4, and 5. So 5 down means market is moving in the major direction. If the market moves 5 waves in a particular direction, most probably it is the major direction the market is wanting to take. All right. And once the 5 waves are complete, you would see that the market will correct itself into 3 waves like this. We have labeled 1, 2, 3, 4, 5 on the live chart. If you had seen in the last screen, after the 5 waves movement, it will most ideally, I'm not saying that is the thumb rule. There are other corrective waves forming. Some are zigzag, some are flat, some of them are expanded flat, some are very uh, complex corrective structures. All right, we will touch upon them later on. But ideally, it will be a 3-wave corrective rally like this, which can be labeled as ABC. All right, so that is the basic pattern. We are trying to look out in a real time for the Euro USD. All right. Okay, thank you. So let me flip the screen to the live chart now. See, we have wave 1 wave 2, wave 3, and then there was a triangle. I have not discussed triangle in details, but I will do so. Stay tuned if you are interested in learning everything about Elliott wave in my webinars. Okay, stay tuned in the webinars and join each and every webinar. It's going to be an amazing knowledge experience. So wave 3, wave 4, and wave 5. So we've got 5 down. Ideally, after the 5 wave movement on any side, we we should see, it's not a rule of thumb, but we should see a 3 wave corrective movement on the opposite side. So let's try to plot what the market is doing on the other side. Okay, there is a small wave I can plot as ABC here. I am going very slow. There is no need to hurry. Even if you are completing one live chart analysis today, it is absolutely fine. We don't have to rush. uh, and if you have any questions or any doubts, do not hesitate to ask. I will do my best to answer it now, or you can write an email uh, for more explanations, and I will be more than happy to reply. We have got an ABC on the downside as well. If you noticed, I have plotted capital A, and now I'm plotting capital B with a question mark. What it means is that we probably have a wave A in place, and then when probably have a wave B in place. If you are still not able to understand, please have a view here. We have a probable wave A, we have a probable wave B. I have a question. Two numbers. Why? Which two numbers? Which two numbers? Waiting for name. If you can type in which two numbers quickly, then it would help me to answer your question. On the live chart, 1122. Let me see. There are no two numbers that I see. See, let me explain again. This is wave 1. There is only one number here. And then you see A, B, C corrective rally, which is wave 2. And then you see wave 1, 2, 3, 4, and 5, which is wave 3 of a higher degree. If you are confused between why this wave 5 is followed by bracket 3, then this is the nomenclature of the terminology in the wave principle. Wave 3 unfolds into 5 waves. So 1, 2, 3, 4, and 5 waves unfolded, which is the termination point of wave 3. And then there was a triangle A, B, C, D, E, wave 4, followed by wave 5. The smaller letters are the lower degrees, and those written into bracket are higher degrees. Yes, yes, you will have the recording on the website. Please, uh, Oludare, you will have the recordings on the website. So please have some patience. There, it will be there. Okay. Yes, I think I answered your question, so let me move on. See, I understand that there might be some there will be a lot of questions, there will be a lot of queries, because this is the first time we are doing a live session, and it is only a few sessions that I have done in the theory. All right, I'm going to intensify and increase the webinar series uh, end of December. But if it is Christmas time and most of them are offline, it's going to be done meticulously from January 2019. Okay, so please kindly stay in touch with the webinars list coming out and enroll each session. I will be taking theory as well as live. Okay, all right, let's continue. On the presentation first. We are here somewhere. Okay, we are A and we are B. The only question is wave B has dropped almost to the head of initial point of wave A. So we have wave A and wave B on the Euro USD chart almost. The most probable direction from here should be on the north side, which is wave C. All right, let us see on the live chart now. So we've got wave A and then we've got wave B. The most probable direction from here with an arrow mark is on the north side, or should be on the north side. Okay, so this is how uh, Mr. Coyote, I don't know about the CD, but I will get back to you. Please write an email to me. I'll ask the management about it. And but for the recording, it's sure it's going to be on the website. Okay, so if you are here with me, the conclusion that we can draw at this point in time, that is Euro USD has formed a potential wave A and wave B of the corrective side. Please understand the story properly. This was an impulse drop. Impulse, that is 5 waves drop. Okay, we are going to, or we should, or we ideally should experience a corrective into brackets 3 waves rally. Okay, which is unfolded into ABC. Out of the 3 waves rally, we already have wave 1 and wave B. So the most probable, or with high confidence setup, we can conclude that we are most probably moving higher into wave C right there. Now let us, with this in place, with the wave theory in place, we have to, let's play with the numbers now. All right, ideally, if it is a standard flat, which is what it is looking like, then prices may go at least above this price 1.1812. All right, it should ideally cross that. Okay, now let's play some numbers again. When it comes to numbers, Fibonacci, in this case it is retracement that we'll be working upon. Earlier we worked upon the extension. Okay, so we take a Fibonacci retracement of the entire wave dropping from 1.2550 all the way towards 1.13. Okay, there we are. Now if you look at the 38.2%, which was always already met by wave A, let me extend it all the way so that you are able to see it properly. All right, so now we are We are done with the waves, we are done with the resistances, we are now putting out numbers, all right? Okay, so this is how we go step by step, okay? Let's find out a potential convergence now. 38.2% was wave 1. Ideally, it will cross 38.2%, go to a 50%, or even better, the 61.8% Fibonacci retracement is coming at around 1.2078. All right, can you see that 1.2078 price here? All right, so this is our zone. I'm going to mark that zone with a shape here. Let's mark this as a rectangle zone, potential wave C to terminate somewhere around the 50% and the 60% mark, all right? So that we are very clear about where our potential stop loss is going to go, where's our entry coming. This is what is trade analysis, right? Potential trade analysis. We don't want to leave an open trading position. Okay, so at the end of this, we are going to find out a potential trade setup, and I'm going to write down on the screens here. So the range that we found out is between the 50% and the 60%, more probably towards the 60%. Now let's try and find out more possible convergences. Can can I draw a trend line? And would you agree with this trend line, all of you? If you do agree, you can please type in yes. I'm drawing a trend line almost 1 year. All right. I have a few yeses coming on the screen. So we all are agreeing to this. See, trend lines are very, very, very effective and powerful tool, believe it or not. So always use this four combination. First, support resistance. Point number two, count your waves. Spend time in counting your waves. Point number three, draw your trend lines in a proper manner and then use the power of Fibonacci. These four things put together, yeah, I see a lot of yeses coming on the screens. That's good. All right. So using these four powerful tools, you are actually enabling yourselves to bring the kind of objectivity which is required in trading. Point number two, you are trading non-emotionally, I would say. Okay, there are less emotions because you're following the rules and following the steps. All right, so if the screen is proper now, I have just zoomed in a bit. The area, the trend line which is passing is 1.2, kind of 1.2 levels. It is passing around the 21st or end of November. All right, now this is not a thumb rule. Okay, you don't always get to that end of November time frame when the trend line is passing, but it's going to give you an idea that we are just beginning the November series. 21st or 22nd November prices cutting between zero point 0.5 and 61.8% retracement. So at least you have got a 4 weeks to 5 weeks trade direction, which should be on the north side, ideally. All right, so this is your projection. Uh, at least for 4 to 5 weeks. Actually, it will go for multiple weeks. Uh, we are headed towards 1.2, 1.21. So, what is the potential trade setup that we are deriving on the Euro USD chart setup here? All right, let us write it down over here. I would label with potential trade setup title. And the kind of trading style, we would say medium term, because it is for a few weeks that we are expecting. All right, what is the trade? Okay, before that I have to discuss the risk as well. Okay, before you plan and before you enter your trade, you should always plan your risk and reward. So the reward is we have 1.14 kind of levels. We are projecting 1.12, so almost 600 points of reward, potential reward. What could be the potential risk? Just below the head of wave A. What is the head of wave A? It is 1.1301, so let's say 1.13. So 127 points of risk if you enter right now, and a potential of 600 points of reward, and the time duration of few weeks from now. All right, so I'm not saying this strategy is going to work for intraday. Okay, we will discuss in the next step what to do if you're an intraday kind of a trader, or what to do if you're even in between kind of a trader, 2 to 3 days. But if you are a medium term kind of a trader, that is a potential trade setup, which could be long around 1.142030. We have a question. Let me see if it is relevant. Okay. Risk and reward setup means where risk is where you place your stop loss, and reward is where you expect your profits. So in this case, price is at 1.14. Your stop loss ideally should go at 1.13. So 120 points of risk versus your projected reward is around 1.2, which is approximately 600 points of potential reward. All right. So this is what it is. Proposed stop loss should go at 1.1300, which is 120 points of risk, and take profit 1.2000 and 100. That could be a medium term trade setup. Please remember, we are talking about potential trade setups. Please go to the disclaimer as well on the beginning of this presentation. Okay, so this is the ideal way where you should be. These are the ideal steps, I should say, that one should follow while making an analysis. Okay, now the next step that we are going to do here is, as I said, it is a perspective view. But let me first confirm, if you have any questions until now, please let us discuss, and then I am going to give you another perspective view of the analysis. If you have any questions or doubts, kindly clear it now, so that I'm more confident to go ahead. We are all on the same page. I presume that there are no questions, so let me put it this way. Shall I go ahead? If it is, please type in yes. Yeah, thank you. What do you do if you are an intraday kind of a trader? Not everyone would want to wait for several weeks to. I mean, this is one of the best strategies that traders would want to make money, but believe it or not, Joseph, yes, for a new trader, Intraday is not advisable. I repeat, intraday that we are going to discuss now is not advisable. For a new trader, it is best to become a swing trader and get the level of confidence in your analysis and skills before you drop down your time frames and take your tools out and fight as an intraday trader. All right, I'm not saying it cannot be done, but for a beginner it is always good to trade the swings. So what do you do if you're an intraday kind of a trader? Now the only one step you need to do is, since your trading time is short because you're trading intraday or maybe 1 or 2 days, Frank, this is a swing. What we are discussing is a swing. This is a swing, okay? Wave A is a swing. Wave B is a swing. We are discussing wave C. Take the entire wave C. If you're taking the entire wave C, you are a swing trader. And if you're trying to take in between what is happening, then you are a short term or possibly intraday kind of a trader. All right. So what should you do if you want to trade for short term? All right. So the only thing you do is, yes, I'm coming to that pin. I'm coming to that. You decide what is the best time for you, but I would like to discuss a general idea about short-term trading. All right. Point number one: whether you, and believe it or not, this is extremely important. You are an intraday trader. All right. Let's stick to that. With this fact in mind, if you open up a 15 minutes chart and you try to analyze, or you open up an hourly chart and you try to analyze, there are all possible chances for you to go wrong. I repeat myself, you are an intraday short-term kind of a trader. You go on a short-term time frame straight away. You do your analysis, you do your swings, you do your wave counts and Fibonacci and everything. But there is an element of doubt which may indicate that you're doing something wrong. Why? Because you don't have the bigger picture in mind. A reasonable picture should always be in your subconscious mind, whether you are trading intraday or swing. Period. It goes without saying, if you are not having the bigger picture, the top view, then you're not eligible, or you should not even try to go on the short-term time frames. You may be distracted, you may be going against the trend and you don't even know that. All right. So you want to do intraday, spend some time on a larger time frame, ideally 4 hours or a daily. You have a price range here to play around. Your price range is between 1.13 and it can go all the way towards 1.2. So you've got a price range of 600 pips. That means you're more clear that higher probabilities for the market is to go north from here. So with this strategy in your mind, and now you go on a smaller time frame, you buy the dips on the shorter time frame. You don't sell the rise, okay? You buy the dips on the shorter time. This is the strategy. This is the way you plan your trades, even on the smaller time frame. So with this in your pocket now, okay, what you want to do as an intraday trader is simply switch your time frames. Go to an hourly chart, at least an hourly chart, and then if required, go on a 15 minutes chart. Let us do this on the hourly chart first. All right. I'm going to remove everything here. I'm going to remove everything here because a chart is a chart is a chart. You might get confused. I don't know, if you're a beginner, you might get confused with all the older stories overlapping the smaller time frames. So you might want to clear it up, okay? And then always make sure that you're bringing up the right view in front of your screens. I mean, don't just see the things that you want to see the things that the market is offering you. So ideally, I would like to see the swing, the entire drop, entire wave B, okay? And I would like to plot a trend line. Use your tools in the right manner. Here you go. That is my resistance trend line, immediate resistance trend line. So what is the story now? The story is clear. Prices break this resistance trend line. That means it is out. It is potentially out towards achieving higher targets. All right. If you need more confirmation, and you always should need more confirmation, what is the next confirmation? Next confirmation is the major resistance. This is your major resistance, 1.1620. Okay, so that is your that should be the first target for the bulls towards 1.2, but that should be the first target for the bulls. How are they going to achieve it? So keep your trend lines ready, keep your resistance and support ready. Again, in this part, it is a falling market. Emmanuel, you mean to say how many pairs or how many currency pairs you should trade as a swing trader? If this is your question, there is no rule for that. But a wise way to put is this: more number of currency pairs you are trying to trade does not imply or guarantee that you are going to make more money. In fact, you will have more focus if you trade or analyze or stick to one or two currency pairs and maybe one metal, and that's it. Okay, spreading so much might end up losing your focus, and sometimes trading losing your focus in trading will pay you a big way. All right, so let's continue here. I would draw a trend line down there as well. I can see a trend line here. A short-term trend line is already broken. So prices have broken the trend line, but I would like to see for a confirmation, because I'm planning my trade right now. Okay, we don't have a trade right now. If we took the trade here, that would have been a best possible case, but we don't have a trade on the screen right now. We are here to find out a potential trade for ourselves. So which is the latest? Now let's see, we've done the trend lines, we've done the support resistance. Let's come down to the waves now. Okay, the story on the left hand side is done. We don't need to do it again. So I'm going to zoom in a bit, and we might want to see this story. This is the wave that one should be interested on. Okay, that is the wave which is being worked upon. Do you agree, guys? This is the wave which is being worked upon. There is a small interim resistance out there which was taken out, and a pullback has also been made. So we can work on this wave as a short-term traders or an interday kind of a trader. Do you all agree to me? So let's do some plotting here. Probable plotting could be, I'm going to label this as a lower degree wave 1. Let's I don't want to confuse, but if you are interested, you will be very happy to see that this wave 1 was constructed in 5 waves. If you can pay attention here, that would be wave 1, If you were there with me in my last webinar, I gave you a statement. Smaller waves are busy forming larger waves of a higher degree, and this is what it means. Can you see 5 waves unfolding here? And probably forming a wave 1. Can you see the 5 waves here? This is on the north side now. Alright, so we might have already got the first wave between 1.13 and 1.145. What do you do the next move now? Also, probably the second wave is also in place. Do you agree? This could be in place. I am putting a question mark there. This is wave 1. You see a corrective drop here. ABC. Can you all see that? So we have a potential corrective drop here, ABC. So we might have got wave 1 and wave 2 already, and wave 3 could be in place, or we might see yet another test or drop below 1.1360. So let's find out with the Fibonacci resistance retracement. Sorry, we spread the retracement here. Okay, so either we've got a wave 2 here in place, or we might see yet another drop, and the second wave might be here. So we would like to buy in which range now? We would like to buy around this range. Alright, that is your buy zone. Your stop loss will go below 1.13, and let us take your targets. Extension. We've got to do this. So where is your extension now? Extension is your profit. Are you all with me till now? The extension is around 1 point. If you are, then kindly let me know by doing some sign. Type in yes. Okay. So the trade setup is buy around 1.1630, or I would say, to be slightly aggressive, you might want to say the potential trade setup is about. Now this is short-term trade setup. Agreed? Long between 1.136080, and what could be the next entry? And this is the optimum entry that we are trying to take. Okay, we want to place your stop loss at 1.11300. You want to take your profits at 1.160020. Yeah, a lot of yeses. Alright, so we just found out a potential short-term trade. We would like to wait for prices to drop at least towards 1.1380 so that we can get in and the risk reward ratio can be improved. Okay, so don't hurry right now. Wait for a slight drop, then your stop loss is around 1.13, which is giving us an 80 points of risk, and the reward what possibly is about 225. So the risk reward ratio is again 1 is to kind of 1 is to 1.3, 1 is to 3. So this is how you find out a short-term trade setup. Now, if you are yet an aggressive, still aggressive kind of a trader, you might go counter trend. But this is a strategy which I will discuss in the future sessions. I don't want to put it all together and so that it becomes more confusing. All right. So for now, we have done one chart analysis in this session, Euro USD. I know we've gone a bit slow, but believe it or not, this is the first session, and quite a few theory sessions are still not taken. So it's all new. Things are moving slow, but as time passes in the next few weeks, please watch out for the upcoming webinars series uh, for the Elliott wave principle and the live trading strategies, where I will be discussing both theory and practicals one after other. All right. So if you have any questions now, you may want to ask. But at this point in time, we have done a medium term analysis, which is pointing towards 1.2, and a short term analysis, which is pointing towards 1.1620 for the Euro USD. I wanted to touch base upon other charts as well, but no problems. The next date that I'm doing my live webinar is on the 20th of November, and hopefully we would like to cover more instrument in that sessions. If you have any questions, please you may ask right now, or you may send in your questions via email. I'm just typing my email here. You might want to send in your queries or questions or your valuable feedbacks to this email, and I would be more happy to get back to you and reply in the best possible way. Yeah, thank you, Usama, and God bless you as well. And I would end the seminar here and see you on the 20th of November. Until then, have a great time. Bye bye.